EU lawmakers say. First it was free trade, then the Paris Climate Agreement. Now, European lawmakers are warning that President Donald Trump's anti-globalist agenda threatens to erode years of cooperation on financial regulations forged after the 2008 crisis. European Parliament members are traveling to Washington this week to meet with top lawmakers and other officials, where they can air their concerns about the U.S. commitment to international rules. The meetings come amid moves by the Trump administration and Congress to roll back bank regulations. The recommendations, especially coming from the Treasury Department, are constituting a kind of America First policy in financial regulation, said Markus Ferber, a vice chairman of the Parliament's Economic Committee. This is a considerable deviation from our international agreed standards, he said. We have the feeling that the United States is going to leave this path. In withdrawing from the landmark Paris Climate Accord in a speech last month, Trump declared that he was elected to represent Pittsburgh, not Paris, underscoring his vow to put America's interests above global concerns. For EU bank regulators, it was a curious choice of locations for Trump. It was in Pittsburgh, at a G20 meeting in 2009, where world leaders recognized the need to work together to rescue and regulate the financial markets after the worst crash since the Great Depression. For us, Pittsburgh is still valid, said Ferber, a German representing Bavaria who is aligned with Chancellor Angela Merkel. Facing financial instability and mounting unemployment in the US and EU, the world leaders agreed in September 2009 to require banks to bulk up on capital so they could withstand future shocks. They committed to centralized trading in derivatives, the unregulated financial instruments that helped spark the credit meltdown. And they approved the overhaul of rules for executive compensation that had encouraged excessive risk-taking. The U.S. House passed legislation last month that would gut many of the post-crisis banking reforms, and Trump's Treasury Department is proposing to curtail some key regulations. Trump, in setting the tone at the top, is clearing the way for a weakening of crucial regulations, said Martin Wheatley, who headed the UK Financial Conduct Authority until September 2015. A breakdown in regulatory cooperation risks seeding the next financial crisis, he said. We shouldn't forget that. During their meetings in Washington and New York this week, the Europeans will voice those worries to American financial regulators and lawmakers. Among them, Jay Clayton, the chairman of the SEC, Christopher Giancarlo, the head of the Commodity Futures Trading Commission, and Stanley Fischer, the vice chair of the Federal Reserve Board. They're also scheduled to meet with officials from Trump's National Economic Council. On Capitol Hill, the members of the European Parliament will talk with powerful lawmakers, including Senate Banking Chairman Mike Crapo and Representative Peter Roskam, chairman of the House Ways and Means Subcommittee for Tax Policy, before heading to New York. The U.S.EU divergence on regulation focuses on agreements reached since the financial crisis in the city of Basel on the Rhine River in Switzerland. There, U.S. banking regulators and their counterparts from around the world have drawn up banking rules for countries to follow. The U.S. new hesitancy to advance Basel regulations has Ferber and other Europeans displeased. Ferber mentioned two items in the Basel banking standards, one, called the Net Stable Funding Ratio, which tries to ensure that banks have enough liquidity during a crisis, and another aimed at reining in trading risks for the lenders. In a June report, the U.S. Treasury Department recommended delaying implementation of both standards, saying these regulations would pile unnecessary burdens on banks. In a July 12 speech, the governor of France's central bank, François Villeroy de Gallet, criticized the Treasury. Such changes would be completely different and would be a source of great concern for all, he said. Any temptation of competitive deregulation would be a lose-lose game, which would increase the risk of a new financial crisis. International cooperation on financial sector regulation is our common good. Nicolas Veron, a senior fellow at Bruegel, a Brussels-based think tank, says the Europeans are overreacting. There is no real evidence that the U.S. is ripping up agreements, said Veron, a visiting fellow at the Peterson Institute in Washington. The Treasury report was hardly draconian, he said, and many of the people Trump has appointed to regulate financial markets are considered moderates, including Rand Paul, who has been picked to become the Fed's top regulator. The Europeans are right to complain about trade and climate, but at this point I wouldn't extend that to financial regulation, Veron said. Yet for global financial companies, antipathy over financial regulation poses a major risk: retaliation. In November, the European Union proposed to force U.S. banks with significant operations on the continent to establish separate holding companies to keep capital and liquidity in the bloc. Banks are concerned that they will be hit with higher costs and decreased flexibility in times of market stress. Bankers saw the move as retaliation for a U.S. regulation that required all the largest banks to set up holding companies. U.S. companies are closely watching to see if EU officials go ahead with that move. "I do fear that we are on the edge of the precipice with regulations fragmenting," said Jeremy Newell, an executive managing director at the Clearing House, a lobbying group for global banks, who was also speaking in Paris. That, Newell said, would have enormous costs. Poll: Trump's 6-month approval rating hits historic low. President Donald Trump has hit the lowest approval rating of any president during their first nearly 6 months in office in 70 years, according to a new ABC News, Washington Post poll. 36% of those surveyed approve of the president's job performance, which is 6 points down from his 100-day mark, while 58% disapprove of Trump's performance. Gerald Ford was the last president to be near that mark in the poll half a year into his presidency, with a 39% approval rating in February 1975. At the 6-month mark, both former Presidents Barack Obama and George W. Bush were at 59%. In regards to Donald Trump Jr.'s meeting with a Russian lawyer aimed at getting information on Hillary Clinton during the 2016 election, 63% said his actions were inappropriate. 60% think Russia tried to influence the 2016 presidential race and 67% believe Trump aides helped them. Trump Jr.'s meeting with Natalia Veselnitskaya, a politically connected Russian lawyer whom the Trump team believed had damaging information on Clinton in June 2016, has stirred controversy for the White House. In addition, 38% of those surveyed said Trump has made significant progress toward his goals, with 55% thinking otherwise. 2/3 of respondents also don't trust Trump to negotiate with world leaders on the U.S.'s behalf, specifically Russian leader Vladimir Putin, following the G20 summit. Just 27% said the U.S.'s world leadership has gotten stronger under Trump, while about half said it's gotten weaker. The poll was conducted by landline and cell phone from July 10 to 13 in both English and Spanish among a random sample of 1,001 adults with a margin of error of 3.5 points. Trump campaign paid $50,000 to Trump Jr.'s attorney. President Donald Trump appears to have used more than $500,000 in campaign funds to pay legal fees over the last 3 months. New campaign filings show. The spending included $50,000 in legal expenses to lawyer Alan Funerfas, who is now representing Donald Trump Jr., on June 27. Trump disclosed $677,826 in payments described in filings as legal consulting between April and June of 2017, a significant chunk of the $4.37 million his campaign spent overall, as the number and velocity of investigations into potential Russian interference in the 2016 election increased. The campaign spent significantly more in this area during the late spring and summer than during the first 3 months of the year, when it reported paying $249,344 on legal expenses. Trump has spent more than $4.5 million of campaign funds on legal costs since the beginning of his campaign. Trump's campaign reported paying $538,265 in the last 3 months to Jones Day, the campaign's law firm, up from $190,306 in the first quarter of 2017. Trump's campaign and 2 affiliated joint fundraising committees disclosed raising $13.9 million on Saturday. So long as Trump is only paying expenses incurred from the parts of the investigation related to his campaign, it's legal for the president to use his campaign donations to pay legal expenses or the legal expenses for Trump Jr., said Larry Noble, senior director at the Campaign Legal Center. They're obviously increasing the number of lawyers they have working for them, Noble said. And, Trump seems to be, to a certain extent, churning through lawyers, so this could get expensive. The White House did not respond to a request for comment. The Trump campaign made the payment to Funifas 2 weeks before the New York Times reported an exchange between Trump Jr. and a Russian official about arranging a meeting to discuss damaging research on the Clinton campaign. Funifas' involvement was first reported by Reuters on July 10. The new filings say payments were made for legal consulting, a vague term that could encompass a variety of expenses, including, possibly, settlement payments for cases brought against the Trump campaign. The $50,000 was paid to Funifas on June 27, just 3 days before the filing deadline. Additionally, the campaign paid $89,561 on June 30 to the Trump Corporation for legal consulting. Since the payments were made within days of the end of the filing period, they may represent only a small portion of the amount that is now being billed to Trump's campaign by Funifas and the Trump Corporation. The payments to the Trump Corporation could be for lawyers employed by the corporation working on campaign-related issues such as the Russia probe, or possibly to reimburse other lawyers hired by the Trump Corporation whose names are not disclosed in the filing. Campaign finance records do not show any prior payments for legal services made from the campaign to the Trump Corporation in the past. The Trump campaign racked up multiple lawsuits, including suits stemming from violent incidents at rallies and alleged copyright infringement. In one case, a former campaign staffer alleged the campaign failed to act when Trump's North Carolina state director twice pulled a gun on campaign employees.